The market has entered correction territory and potentially a crash is ahead. What's going on, everybody? My name is Dr. B. I'm a holistic life and business coach and strategist for entrepreneur, investor for the last 10 plus years, active trader for the last 6 to 7. So have traded a Trump market in 2018 with the tariffs and 2020 crash and then into that 2022 bear market. So a lot of questions, a lot of concerns around what's going on right now in 2025 and where we're headed. Because if you're having someone saying, buy the dip, buy the dip, buy the dip. And for my newer investors, more specifically, you're like, where in the world is the dip, right? How much more cash do I need to put in this market where it becomes concerning, right? If you're an active investor and you've been in this game for a minute and you're just like, hey, I'm still buying, I'm still buying, I'm still buying, I'm still buying. That is absolutely amazing because we're going to look on the charts and see exactly where some levels are where you can be a little bit more confident. But right now we're kind of on that teeter-totter. We're breaking some very key levels and it could enter a free fall. So we want to be very careful that we pop, which is what we want potentially this week. And then potentially we could come down even lower. So we are in extreme fear, which is a buying zone, a buying opportunity. A correction zone is 9 to 10% of a pullback from the highs, and we're sitting right on it. So let's, without further ado, me yapping, let me just show you here, and would love to have you inside of our Discord if you want to check out more information. If you're liking these videos, please hit me a like, a thumbs up, and a subscription. Subscribe on this channel. I would really appreciate it if you've been here before. A lot of you are watching, but you're not subscribed. Get those notifications turned on and would love to have you. All right. We see the futures market is down, and then we've got these concerns here with specifically Tesla, even NVIDIA, some big tech names that are pulling back pretty heavy that a lot of folks are heavily invested into. And maybe you got in at the wrong time, or maybe you're just like, great, I get to get more, right? Doge chief Elon Musk says he's running his businesses with great difficulty as Tesla shares tank 15+% today. That's not where what you want to hear from your CEO if you're a shareholder, an investor, that he's not focused. He's running it with great difficulty. Profitability and earnings have been absolutely horrible as of late. And there's just like a free fall underneath 250. And we talked about that on our stock sermon Sunday, which is every Sunday at 7 p.m. Eastern Standard Time. Go and mark it on your calendars to get our levels and to understand what's going to happen for that week. We also have stock market plunge is not as meaningful as business activity. So in lieu of, President Trump right now, he is talking about that he's not even paying attention to the stock market. He's like, I'm trying to do what's best to get us out of these situations, get America to be great again, and do all that stuff to get us back where we need to be, which is forcing the Fed's hand to cut rates. Very similar to what happened in 2020, where there was an unwanted, obviously, health pandemic, but it was a forced crash to force the Fed's hand to cut rates really drastically so buyers could come back into the market. But like I said on our stock sermon Sunday, this is very concerning because folks are heavily in debt. People are running out of cash, depending on who they are, right? I'm not talking about everybody, but the average American is like, I'm just paying my bills, doing my thing. My job's not giving me a raise. They're laying off folks. What's going on here? So even if they do cut rates, do I want to buy a home in these markets? Maybe if you have heavy cash on hand. Do I want to go buy a car right now when car prices are up? I don't care if I'm just talking in third person here. I don't really care if the interest rate come down to 2 to 3%. I don't even want to buy a car, right? So that's essentially what's going on right now. So we'll jump on the charts, and that's all fundamental news. That's fear mongering. That's getting people scared, and that's cool. But anytime this happens, every time this happens, we have a massive recovery, which could take another year. It could take 2 years. It could take a couple of months. Who knows? All right. But we are in correction territory, which is buy zones. All right. So let's jump into it right here on the charts where all the money's made. And let's jump right into Tesla, since that is where the thumbnail is and where a lot of folks are wondering where in the world is this going. Okay. So do you see here on the charts I marked that right in these gray areas, this is, I can mark this. There's a gap, okay, in the stock. This was the earnings gap where their earnings missed and they still popped. Then we pulled back, and then leading up into election, people were buying into the election. Okay. This was a pump and dump. All right. because this was all based on Elon. This whole move was based off of the CEO and what the projection. It's kind of like a buy the rumor, sell the news event. Okay. It was all fake. And we may get back up to those levels because we got gaps back up. But where do you buy this? Where does the selling stop? Okay. And a couple of levels that I'm looking at are we broke below these key levels of support that we needed to hold, which was right at 270. We broke below this 300 where people thought it might stop right there. Okay. And we have broken below 250 now, which is filling the earnings gap. Okay. Which is right here. Now we've got a psychological level approaching. Psychological meaning round, even numbers where stocks like to gravitate towards, which is 200 and 210. All right. 200 and 210. So right around this zone, do you see that there's a lot of activity? Buyers at 210, buyers down into 200, right? So my next level solidly for Tesla would be probably down in this 210 to 200 range. Tesla dropped $30, roughly $40 today, and it's down after hours into 215. So there's the after hours that's happening right now, is still selling, and it's coming down into this capitulation area, which we talked about on our stock sermon Sundays. Capitulation, for my folks that didn't watch that, let me just capitulation stocks. Okay. In stocks occurs when a large number of investors sell their shares at a loss due to a prolonged decline in the stock's price. Okay. So it is a flash crash, if you want to call it that. Capitulation is just this unloading of, okay, it's broken my levels. I need to cut losses. I need to get out of this. I need to hit my stop losses, whatever it is. I need to find another re-entry point. That's what capitulation is when you see these massive plunges where it just falls all day with no recovery. And you're like, I'm buying the dip. I'm buying the dip. I'm buying the dip. Where's the stop? Where are we stopping? Where are we stopping? Right? So this is hard. It's called a falling knife. It's very hard to catch. So if you're an active investor and you know what you're doing, you love this, right? If you are a Tesla bull, then it gets you a cheaper price. Now, my final level on Tesla, in my opinion, okay, is if we break below 200 and get down to the 180s, there's nothing but room if the market just maybe tariffs come in even more harshly, investors get a little bit more concerned, and we come down into this 150 area. Now you might be like, Brian, there's no way. Okay. I'm a big gap fill type of person, or gaps in the stock that like to get filled. And here is a gap where we had some capitulation last time where we fell right into that 138 and it got bought up and then we never stopped. Okay. So this was a capitulation where he gapped down and then gapped up in the morning and then just kept running. Okay. So that was a drastic kind of flash crash back in April of last year. Okay. We went down to those low points and buyers stepped in very heavily. That gap never got filled. So that is down into the 150s again. And look where we're kind of headed again. If I turn on the moving averages on a weekly time frame, we are below all the moving averages right now. When we're below these moving averages on every single, more specifically a weekly time frame, if I go on a monthly time frame, you can see that the next moving average on a monthly is down right in that area. Okay. So that is probably the best area for Tesla if you're a Tesla bull and you want to pick up more. If you're frustrated with Tesla, you're like, I'm done. I don't know where this thing is going. I've been waiting for 5 years and I didn't take profit up here. Then you may be like, I'm done. I'm going to move my money elsewhere. But if you're still believing in Elon or the company or the AI that they have going on that may take another 3, 4, 5 years, whatever, I'm just here as a conduit. I'm just here relaying information on a public platform and giving you solid levels here where right there at 200 and then below would be into the 150s. Okay. There's your Tesla levels. I personally, if you've got a lot of cash on hand, you can just keep dollar cost averaging on the way down. But if you want your big lump sum buy-ins, I would say wait until below 200 or right at 200 if you want to do there. And then if you're just like, I'm just going to wait, I would wait down into the 160, 150, 140 range. All right. Now let's look at SPY here as well. Okay. The S&P 500 ETF, SPY. And one thing that I like to look at is this RSI. Okay. The relative strength index on a daily is sitting right here at the bottom end of the range, which is technically a buy signal, but you can't time the market. It's just being timed in it. And you can use technical indicators to see when we might have a recovery. You see here on a weekly, we are starting to cool off pretty drastically. And on a monthly, we're still super overextended. Okay. So what does all this mean, Brian? Are we going up? Are we going down? Okay. Here's my thesis. Okay. We still have CPI and PPI this week, our inflation data reports that come in Wednesday morning and Wednesday morning and Thursday morning. So typically you do not want to carry trades into those data. If you have some insider information, that's great. But typically a trader's rule is not to carry big trades into heavy data like that. However, we are extremely oversold levels. And my kind of thesis / prediction is that tomorrow, if we can recover, then CPI should recover us back into these highs. Okay. Ideally. And you're like, why is that, Brian? Well, we have never retested some of these levels where we should have retested ideally today. We just literally fell off open below that 570 and I was looking for a push up into 572 and then reject it to go lower. And we just fell right off open. Okay. A lot of fears on a Monday. And hey, we could fall lower, but my ideal look is to have a pop. Okay. Pretty soon, whether it's tomorrow, Wednesday, Thursday, by Friday, ideally that's what should happen. Okay. But no one has a crystal ball. Just based off of technical levels, right? We should have some sort of rebound and squeeze back up to the upside, trapping those bears a little bit more down here as they keep trying to play puts and short and short and short. And then it starts to get to an extremely oversold level to where people are starting to switch their sentiment and start buying that dip. Okay. Risk to reward is starting to get, in my opinion, okay, because we can go lower, starting to get a little bit overdone on the downside. Okay. Here's how it looks. If you don't know what risk to reward is, that means that if you are trading, more specifically, not long-term investing, just keep buying the dip for long-term investors. If you are trading, okay, SPY, and you decide to short, meaning enter puts again tomorrow, right off open. Like, Brian, I could have entered puts right off open today. Yeah, that's great. Okay. Yeah. But here we go. If you enter puts and you get a little bit more push down, well, that's all your risk. It's right there. Okay. That's how much reward you would get, maybe a little bit more reward, but then you could get trapped and get squeezed back up like that. And that is where I'm just a little bit trying to find my footing on where we are, because puts worked out really well today. And I was looking for them, but could not find an entry for me personally, based off of my trading style. I like to have very, very little drawdown on my trades. And I was looking for 572. And then by the time Tesla was gone underneath 250, I was trying to find an entry and just hop in and go. I personally don't like to trade that way. So if you caught any puts today, congrats to you. Amazing job. I'm more of a risk to reward options trader. Okay. So that being said, targets on the upside would be ideally a push back into 570. If we can get back above this 563 level confidently, if we can get back above 563, then I personally believe we can push into those higher ends of the range of 560s and then try to get back up into those gap fill areas. And I'll show you here on the charts what that looks like. Those gap fills back up. Okay. There's a gap that needs to get filled and push right back up into there. Okay. Where I would be looking to short potentially. Again, that's what I mean by, is this selling over? Maybe, maybe not. Because we can push right back up into there and then get rejected right again, and fears are still there. Okay. So This capitulation? We don't know. We'll see tomorrow where we rebound if we're up pre-market, or the jobs openings comes in at 10 a.m. Eastern Standard Time. So we have 10 a.m. data. Please be mindful of that. All right. Now let's talk about some positives. Okay. Maybe SPY and QQQ, you're a little concerned because you see this moving average on the Qs, which is the NASDAQ, our tech index. Again, below all the moving averages on a daily. Below a key moving average here, which is 485 on QQQ. On a monthly, we're starting to approach the next, which is roughly into 450. But let me show you this correction territory. Typically correction territory, we should rebound, which we're sitting at about 12% down. Okay. That is correction territory. Crash territory is right there, which is where we're headed. Okay. So your big dip buy would be QQQ 430, 440 area. All right. But hopefully we can rebound before that and at least get this little push up by next couple of days. That'd be ideal. And I'm only saying that because I'm in some Google calls for this gap back up. Google held very, very well today. Okay. Now it is down after hours, which kind of sucks. But all while this push down was going on SPY, Google was sitting and sitting and sitting and sitting and sitting. And we got that little end of the day squeeze right there. And it kind of had a double bottom. So kind of looking for Google to step up and the market to step up a little bit and squeeze back up like that. Okay. So I am in some Google calls. We'll see what happens. But I was looking at Google holding this 163 level very, very well. It needs to get back above 167, and then we'll start squeezing with the market. Apple, another stock that was absolutely beat down today, but again, it's sitting on a moving average right there at 227, which is very key, and it's down after hours. Now, one thing here on Apple is it's got a little bit more gap to fill, as you can see there, down in that 220, 222 area. So Apple still didn't fill its full gap, and it could reject right back down into there. Okay. So again, oversold on an RSI, but does that matter right now? Maybe not necessarily. Okay. Do you see there on a 1 hour, on a 2 hour, and we should get some type of recovery tomorrow if bears can get trapped down here and then buyers step in and then bears start moving out of the way. Okay. So I think these are great buying opportunities. If this is maybe your first ad, your first addition for shares. However, please be mindful we could come lower. For my traders out there, if you're looking at, man, where do I start getting some calls potentially because this is a big dip buy opportunity, I would automatically look at least a week out if you don't know what you're doing. So Apple, I was looking at the 235 calls for next week, maybe even 230s if you're that type of person. But we need to see what's happening with CPI and PPI. So I'm looking hopefully to get a pop tomorrow, get out of my call positions, and then reassess where we're going from here. All right. Microsoft, big gaps back to the upside. So these are big money-making opportunities whenever it happens, and it will happen. This right here is big, big money. Okay. In shares, if you trade shares, and specifically in options, a 20, 30, 40 point move on Microsoft, massive money. Whenever it depends on when it happens, when the market decides to, good news comes in, something's going to happen. Okay. So please be mindful. If you're a little bit kind of hands off, it's okay to sit back and just wait until a change in direction comes. Just let the falling knife fall, let it fall, and then see where we're going from here. Okay. Another company that people are wondering about is NVIDIA. Now, NVIDIA's levels to me are leveling pretty well. All right. I personally was waiting on NVIDIA all the way down into 100. It's got a little bit more gap to fill right there. So NVIDIA, we could see down into this 100 level pretty quickly like that. All right. Now, ideally, we're looking for this move, right? And that would be that crash. Okay, that would be crash territory for NVIDIA. It's already in a serious correction from these highs, right? Let's serious pullback. We're down almost 30% from the most recent highs, 150 down to 100. So it is already in quote unquote crash territory, but we need to see where the market's going. So all in all, please, please, please lower your risk size if you're not comfortable or you don't know what you're doing. If you're trading more specifically, not financial advice. Also, for my long-term investors, please have multiple additions, right? If you're buying the dip on the way down and you have $1,000 as an example, cool, 300 here, another 400 here, and my final 300 with the final level. Maybe you want to slowly do it, lower than that, 200, 200, and then load up the final 600. Okay. So please be mindful on the way down. Or if you're more of a passive type of person, great. Put it on a dollar cost average and just put $5-10 a day, whatever your financial situation is. Okay. But this is very key to understand how do you trade this? How do you invest into this? Now, Amazon 190 level looks really, really good in my opinion. Okay. It all depends on where the market's going, but Amazon had a nice bounce, right? Nice double bottom here at 190 and it held above 190. See if we can get Amazon pushing back up into 200. So we know Amazon's not going anywhere. All right. It's at a decent level of a trend line as well. So I like Amazon, how it's looking 1, 2, 3, 4, right on this trend line and right at that previous high at 190. So Amazon's looking pretty decent. I like that where that's sitting at 190. So maybe Amazon's a good look for you back on the upside. It's sitting at a very decent level there. All right. Couple others, Ionic, Palantir. Palantir below 80 could get dangerous. Okay. Below 80 on Palantir could get pretty dangerous here, meaning it could fall lower. All right. So if we push back up into 80, we need to see what it does at 80. Okay. 80, 82, something like that. And ultimately below, let's see, something like that. So it needs to break that trend. So if we pop up into there, right, back to 88, maybe we get squeezed back up. Okay. If it reclaims 88 and back to 90, then we can go to 100. Okay. So ideally getting a little bit overdone here. Maybe we have a little bit more on Palantir. Let's turn on some moving averages there, sitting right on that 100-day moving average on a daily. So 100 daily sitting right there at 73. So I would not short into that 72, 73 level because we could bounce. But if we break below 70, again, another psychological level, we could come down to the next one like that. Okay. So all in all, just want to make this quick video here to understand where we're headed and how you can approach this. So again, we're at a correction zone. That is technically a buy signal, buy level. We're in extreme fear, but we do have a couple other things coming this week that could send us lower. So if you're like, man, I'm going to load the boat here, please always expect to have your risk hat on to buy lower or to cut your losses and reassess. Okay. But if we pop from here, you're going to look like a genius. Okay. So anything can happen. Keep your head on a swivel, as I say. Love you all. If you have any questions, put them down in the comments. I do look at the comments as well. Correction territory equals buy zones. Extreme fear equals buy zones, which equals wealth building, money opportunities back to the upside. Okay. But keep your risk hat on as we may have some rough roads ahead. All right. Love you all. Thank you so much. As always, please hit that like button, subscribe button, turn on notifications, join Leverage University. The link below if you want to join our Discord and trade with us this week. Love you. Talk to you soon. Peace.